Hey guys, welcome back to another week of Mortgage Matters in Minutes. I'm your host, Brett Rasmussen, owner of Mortgage Specialists. Today, we have a very important topic, and it's one on credit that many people ask us, especially the younger generation, or people that have had bad credit in the past and need to work to rebuild new credit. So, we're going to talk today how to build credit from scratch, saying you have no credit at all, or this is a great plan if you have bad credit, which means maybe all of the accounts that you started and opened are in collections, are written off, and there's no more open accounts that you have. Even if you have some open accounts, this isn't bad information to know. This is great information to know to understand what I call credit is a game. And knowing the rules is way better than just making up the rules and finding out later that your credit is not up to par, up to speed. So, credit makes a huge difference because it impacts your whole life. Car loans, student loans, credit cards, mortgages, obviously, all the above. And so, it's even carrying over into house insurance, car insurance as well. So, let's talk about how we can go ahead and build credit from scratch. First thing we want to do is open one credit card. Don't need to go out and open two, three, five at one time. Start with one account. You don't want to use store credit cards like a Target or a store in the mall, or you can use the credit only at one place. You want to use a general credit card like a Visa, Mastercard, Discover card, American Express, but there are thousands and thousands of credit cards. So we'll talk a little bit more about how to narrow those credit cards down. But you also want to apply for a credit card that is a starter credit card. There's lots of credit cards out there. There are websites like Credit Karma, like NerdWallet, like Quicken. There's tons of sites that these banks and lenders advertise their credit card on the site. So you might have to take a little bit of time to look at the different credit cards that are being offered and check the box saying, hey, I don't have any credit and I want to start building credit, because that makes a big difference. Sometimes you might be so young or you have bad credit that you're not able to get a unsecured regular credit card. So you might have to get a secured credit card. And so what I like to tell my clients is ask the person you're applying through, if I can't get a unsecured credit card, can I get a secured credit card? And what are the difference? The difference really is you give $300, $500 in cash and you get $300 or $500 in credit. So it's your own money, but that's the only way they might trust you to open up new credit. But I would tell you, there are companies out there that do focus on first time credit individuals and they understand the risk. Are you going to get the best point package or best interest rate or lowest fees? Probably not, but it still is a game that we have to play. The earlier we get started with credit, the quicker we can turn over into different credit accounts that aren't as costly. So let's talk about managing the credit card. Once you get one open, find out the credit limit. I can share with you the credit limit makes an enormous impact on how your credit score is based and what's going on. When you charge on that credit card, pay off the entire balance. Don't leave money on there. Don't leave a rolling balance. That will harm your credit negatively, especially because you're just starting to build credit. And if you're just starting to build credit, what I call credit is basically just responsibility. And that if you show you can't pay off what you borrowed, then they're going to give you a negative responsibility rating, which is a credit score. So you want to pay off that account and know what your credit limit is, because you don't want to max out the credit limit. You don't even want to go above 50% of the credit limit. You don't even want to go above 30% of the credit limit. So most of the time when you start a new credit account or a new credit card, they're going to give you only $300 worth of credit limit. You don't want to charge over $90 on that credit card. It will give you a negative adverse credit score if you do. So manage that very first card, pay it off every single month, and then you have very good credit moving forward. Another easy way to make sure that you pay it off is setting up auto pay, but not even that. I would suggest that if you charged on something on a Monday, pay it off on Wednesday, Thursday, or Friday. You don't have to wait for the whole statement cycle to show back up. It'll still show on the credit report history that you charged something and you paid it off. And that's really what building credit is all about, is showing a history, a pattern of a situation that's happened over and over and over. We don't know you individually. We don't know you personally. That's why we require a credit score, because it shows us the history of how you've paid your bills. You might go into your first credit thinking, I know I'm going to pay everything on time. But then something happens in your life. You lose your job, become sick, and missing a payment is super detrimental. So now that you have one credit card, wait at least 6 months. I would generally tell you maybe even 12 months before opening up a second credit card, and do the exact same thing that we just talked about, paying your balance down every single month and watching the credit limit, not charging too much, and paying it off early as much as you can. I wouldn't suggest every 12 months opening up another credit card. Over time, as you're building your credit, I would tell you, and I tell most clients, having 3 to 5 credit cards is a manageable set of numbers, because you might charge a large amount on one card for vacation. You don't want to max out each individual card, so you can use different ones along the way. So let's talk a little bit about why people use credit. A lot of times people use credit to charge business expenses or expenses to build points for free hotels, flights, monies to buy other things. If that's your sole reason for using credit, I would say stop. That's just an added extra benefit that you can gain moving forward, but don't chase the point game. I can see all kinds of individuals charging too much money on their credit account, even though it might get paid off every single month, but maxing out that credit card is going to lower your credit score. And at some point in time, when you need credit and you didn't realize your credit card's maxed out, it's going to be an issue with your credit moving forward. So let's talk about or debunk a few myths. I've heard a lot of myths that keeping a very small balance on your credit account somehow gives you a better credit score. I would tell you, no, that's not the case. I've also seen people say keep your credit limits down, because if an institution sees you have too much credit out there, they're going to close you. Generally, that's not the case ever, unless we see a very, very bad market. And even then, we don't see credit cards being closed unless you haven't used it for multiple years. So I would tell you to set up some kind of auto pay on your credit card every year, so that card gets at least used and a charge. I've also seen people say I have to have a student loan or a car loan or multiple credit accounts. Not necessarily. Generally speaking, we want to see you managing your credit more than having multiple accounts. And every credit report and every credit score is different for every single individual across the country. We've seen no two credit reports being exactly the same. And I can tell you, we've seen thousands and thousands and thousands of credit reports. There's lots of information, and every single situation is different based on how long you've had credit, your age, all kinds of variables with limits, how many accounts, how the payment history has, so on and so forth. So building credit isn't about racking up debt and showing that you carry balances. It's really about showing history, pattern of behavior of making regular payments after saying, I'm going to pay you back. And you do pay them back, and doing that regularly over and over every single month. So a lot of the times we're going to see needing 12 months of credit. 12 to 24 months of credit is great. If you don't have that, don't stress. But I would always tell all of our clients to start building credit early. When you're 19 years old, start looking around, being educated about credit to start building that very first credit card. So that way you can purchase another item later on in your life, such as a car, such as a house, such as other items that you might need to borrow more on a longer term basis than coming up with $30,000, $100,000, or $300,000 for a house. Moving forward, after you get a few credit accounts open, be on top of your credit accounts. Whether you start an online subscription to NerdWallet or Quicken or Credit Karma that manages your credit, I would highly suggest that. I've been using a software for over 25, 30 years of managing all my different investment accounts, my credit accounts, asset accounts, all the different things. So you can go to one place to log in to make sure you have all of your stuff organized. Because as you add more and more accounts for different reasons, it's going to be a more challenging thing to be on top of. And What I tell all of my clients is having good credit is good organization. Being organized, knowing when your bills are due, and making sure you're getting your payments in. Hopefully, this solves and answers some of the early credit scenarios that happen of building credit from scratch. And most times, you also need to have a minimum age among every state that you can open up credit, an age of majority. But you can also start building your credit if you are under the age of 18 or 19 by being a authorized user on your parents' credit account, which is something that many people don't realize that can happen. You can be on your parents' Discover, Visa, MasterCard as an authorized user, meaning you're allowed to charge on that account. But if something goes bad, you're not obligated to pay it off. It's kind of a backwards way, but at least does show on your credit that you have some built up credit history that you've showed that you've been able to charge and pay something off throughout time. If you have any credit questions, please reach out to us. Again, credit is very subjective. There's lots of different things going on. There's lots of different answers and reasons. We tried to keep this here very simple and straightforward today by saying if you want to start credit, go into it being educated, paying off your accounts, and being on top of the credit limit will be that's most important and able to get your credit score to be the highest that's available to you. Again, I'm Brent Rasmussen, owner of Mortgage Specialists. Please like, subscribe, comment below if you like this material. If you want to see something that we want to give you some education on, check us out anytime. Again, our website at mtg-specialists.com, or we're always a phone call away, 402-991-5153. Have a great week, everyone. Mortgage Specialists. Driven, trusted, reliable.